Markets Now is brought to you by Durastack Trait Technology, the latest innovation from Syngenta. Available for the 2027 season, Durastack technology features 3 powerful modes of action to outsmart, outmaneuver, and outmatch corn rootworms every move.
And welcome to Markets Now. I'm Michelle Rourke with Joe Kooima of Kooima Varilek. Well, we've been seeing quite a bit of red over in the ag board this morning. Cattle, one exception where we've been a little bit two-sided already. And Joe, let's talk about the cattle market. We had a sell-off yesterday, kind of started off weak today. But like I said, two-sided. Is this all about what's going on here ahead of the report that we're going to get this afternoon? Or is the market keeping an eye on the outside markets and the stock market?
Yeah, thanks for having me on this morning. I did look up like the correlation between like metals and the cattle, and there wasn't a whole lot necessarily at all, as we can kind of see with gold and silver making new highs and whatnot. But it seems like it's such a focusing part here in the marketplace. Ever since the beginning of the year, I mean, metals have taken over. That's where a lot of the monies are going to, the money flow. And now that you have such a spotlight on it, anything that happens over there can have some domino effects everywhere else. It doesn't matter if it's necessarily cattle or hogs or grains or whatever. You can see the pull happening. So I think that is what happened with a little bit yesterday, having these $12, $15 ranges in silver, for crying out loud.
Yeah.
That's definitely going to take into effect. And even with some of the cash bids that kind of exposed yesterday afternoon after the market was closed for cattle, we did see this morning when cattle opened up, it was briefly higher, and then it had a big correction. Feeders are down over $2. Fats were down 80 to 90 cents there. So that, I think the market just had to trade that for a little while. Now they're kind of back on, okay, where's the cash at? Do we drop too far here this morning? Which I think we did, but you have that money flow. The AI generated trade definitely took a handle on that and then flushed it initially.
Yeah, and the stock market and these outside markets did not like the announcement of who President Trump is going to nominate for his Fed chair. So I think that's been part of the mix here this morning too, hasn't it?
For sure. Anytime you get some kind of a change of status quo in the political sense, there it's going to have its mark on the markets. That's for sure.
Also, report positioning, big semi-annual inventory report out this afternoon. And what are we going to be watching in terms of herd rebuilding? What are you going to be looking for?
Yeah, we're gonna take a look at those numbers. We're gonna obviously the beef replacement heifers, and then also we're gonna try to look into that dairy stuff too, to see if there's a little bit of finagling between bred heifers, or just heifers just being put out to pasture, being bred later. And if those dairy heifers, a dairy cross, if they're coming back in to some of the feedlots to kind of keep those numbers that we look at, to keep them under wraps, to see if there's some kind of just a shift going on there. I don't know if I'm making myself a whole lot of clear here necessarily, but if we have enough dairy cross heifers going into the feedlot, is that overshadowing if ranchers are keeping some heifers back to breed a little bit later on? So we're going to do our best to probably try to look at those numbers when they come out at 2:00, but that's a little bit of the sense that we're maybe getting to a certain degree. And talking to some of our ranch customers too, we're seeing a lot of, 2 years ago, it's like, okay, who's going to take over? Because there wasn't a whole lot of money necessarily being made, but now it's just like money talks just a little bit. So I think you're starting to get that generation of maybe look back at the farm, at the ranch, and say, hey, there's probably a spot for me now because we're making a little bit of money. So those are the conversations that we're having just a little bit, and it's definitely making us look or just focus more on some of those numbers and trying to just extract some of that dairy cross stuff here moving forward. That's for sure. So I think you have a little bit of that. Some of these deferred fats, I think, are maybe feeling a little bit of that pressure because 2015 still isn't that long ago. People still have some scars from that, and 2015 was just a rampant, huge heifer retention model that happened. And once the market sniffed that out, it was, I guess I don't even have to go back. That was a pretty rough year. So that's kind of the highlights that we're looking at right now.
Yeah. Right now, average trade guess, I think, on all heifers is like 99% beef replacements at 102. So that speaks to your point there of things that we need to be watching. Okay, the other thing, cash market. We haven't had a ton of cash here, but it sounds like we're still in very good shape there. And do you expect we're going to see higher trade once we get full volume?
I think so. Last week was a little bit of a surprise that we had a good jump of $2 to $3 higher there, and I believe that the producer is going to use that momentum for this week. Yesterday there was some bids out there. It's 237. There's some 238 kind of trade to a northern regional here late yesterday. So the market's taking note of that with that February. But I believe we got the leverage in the producer's hands here right now. So even with like the kill cuts that we had last week and the smaller numbers, it's just going to be tight here for a little while. So stay current is what we can do there, and that's pretty easy to do with the tightness of numbers that we do have. But I think as we develop, or as we go on here this morning, we're going to start seeing some more cash bids erupt.
You bet. And is weather giving them any leverage or not? Or just having the weights go down here? Is that
right?
Main impact?
I think we're going to see a little impact that from last weekend's storm through some of the south there, but we'll take another week to figure out what the weights were with that. But a lot up and down there in the weather for a little bit. It's the first kind of episode of weather that we had with the big swings in temperatures. So it's something to look forward here in the next 2 weeks to see what the weights did.
You bet. The cattle market continues to chase headlines, and one that came out yesterday, Texas Governor Abbott declaring a state of emergency in Texas for New World screwworm. Did the market trade that at all? Does it care?
I think it cares a little bit when you have a headline come out like that. The AIs will grab that headline and start trading accordingly with it. But it's almost interesting that we're 13 months that we've have that border closed because of the screwworm, and now we're calling it an emergency. It's just kind of a little late to the party. We kind of know what it can, what it could do if it does come into the U.S. there. But it seems like, to reiterate some of this stuff, it's just like, let's not cause a headline for that. We've already been through that 2 Fridays ago.
Yeah, that's right. But we're sensitive to when we reopen the border, so it seems like it really catches attention.
For sure.
Okay, the hog market, we have corrected off the contract highs that we scored earlier in the week. Is your sense that we're going to go back up and try to retest those? This is just a little pause.
I think so. We had a little hiccup here with some cash and cutout kind of back and forth, and yesterday both of them were a little bit lower. But you've had a market that has stayed overbought for 6 weeks. Let's have a correction. Let's keep that market healthy in that manner. Like I said, the news is still good. The health is still up in the air, especially moving forward. We're going to start seeing some tighter numbers just from the disease episodes and the rampant disease that we had 6 months ago and whatnot. So that is all still in the news. You have open interest in the hogs that is greater than what the cattle are. So you're seeing some huge fund positioning on the long side with the hogs there too. So you got the trend is your friend. You got the funds involved as well. If a guy wants to take a step back and kind of look at, okay, let's look at a weekly chart or a monthly chart, there's huge gaps in those weekly charts, especially, it just stems from your highs in your summer months and then your lows in your fourth quarter and your first quarter. So in that weekly chart stuff, it makes big gaps. Well, and historically, all those gaps do get filled. So if you pull up a weekly chart, you're seeing a gap, huge gap that starts at like 112, 113 and goes all the way up to 120. And I think with the fundamentals that we have, the excellent demand domestically and internationally, especially to Mexico, this would be a year where that could possibly happen. So everything's kind of set up for that. So we'll take it in stride here, have a little correction right now, but you've had a 3-month rally, and we've had a few days correction that were a few dollars off the highs, and that's all that it can do in an overbought market. I'd say that's pretty good shape.
Yeah, and those cutouts, as you pointed out, have stayed up at a pretty high level for this time of year. So that speaks to that demand, doesn't it?
For sure. Yep. 90 cents even in the fourth quarter. Which is unheard of. Typically it can be in the mid 70s or low 70s, but it hardly tested that 90 cents in the fourth quarter. So that is evident of very good demand.
Yeah. But the disease pressure, the isoweans being over $100, that keeps fueling those back months too, doesn't it?
For sure. You got ice beans as high as $1.07 or $117 this week. Granted, they're kind of going off of the June board, but the availability of them is limited, and sometimes you have to buy sick ones for $100 yet too.
Grains correcting a little bit here this morning. They've gotten caught up in this money flow that we talked about a little bit earlier in the program. But we went up, tested the top end of the trading range in corn and soybeans, couldn't get through it. So now you just backfill here.
Yep. Kind of continue the same way that we have. Range bound, this week was a little exciting a few mornings when you saw that dollar had this huge correction. You saw the metals go higher. So you're kind of thinking a little bit of inflationary kind of value here, but then it just stalls out. Then you have a big correction in the metals, and the dollar surges higher. So you're getting almost some antsy trade going on with that. The beans have a little odd looking chart with that high yesterday in July beans around 1109 to 1111. That kind of matches some highs previous to the big high after the harvest low. So you have a little bit of a head and shoulder type look, which is not real fun to look at, but we'll just call it kind of a range bound on the bottom side there for the beans. It's a bigger range in general, but corn is just going to kind of be stuck here. We have extremely good demand for the prices that we're at, but we also have a report that's overshadowing with big yields, big production, the carry out that's over 2 billion bushel. That's just going to keep us kind of pegged here in this trading range.
Yeah, I felt like we were trading Argentina weather in the beans just a little bit, but obviously there's some forecasts for rain. I don't know if that's playing into that this morning or not, but
for sure, you don't hear a whole lot about South America other than here and there. It gets hot down there. They're in the middle of their growing season, so it's good for them, but you don't hear too much down there. So that tells me you got kind of a big crop coming down there again, which is not a surprise. They add acres every year too, and they're pretty good at what they do down there.
For sure. All right. Thanks so much, Joe Kooima with Kooima Varilek. That is Markets Now.
With corn rootworm costing farmers up to $1 billion a year, you need the right strategy. Introducing Durastack Trait Technology, featuring 3 powerful modes of action to strike corn rootworm at full force, outsmart, outmaneuver, and outmatch their every move with the industry's first triple BT protein stack built for corn rootworm control. Take back your yield potential. Make your move at Durastack.com. Available for the 2027 season.